Hello and welcome back to my channel. My name is Erin, and on this channel I am documenting mine and my husband's journey to complete debt freedom and financial independence. And so I had been doing on Tuesdays or Wednesdays, I had been doing Transfer Tuesdays, and then I switched over to Wednesdays and I called it Wealthy Wednesdays. And I think what I've decided to do is really make my Wednesdays about wealth building. So, talking about the different things that we have done to get out of debt, start building our wealth so that we can secure our financial independence. And that happens to coincide with it being the end of quarter three. And it's at the end of the quarter that I go back through and I start looking at our net worth and some of our other different numbers and such for the past month and then also the past 3 months. So I'm going to start off this series with that. And so I have it sitting here in front of me now. I've got a screenshot of my computer, and if you hear the rain, I do not apologize for the weather doing what the weather does. My name is Erin, not Pudge. I don't control the weather. So we're going to have some sounds of rain soothing us in the background as I go over what our numbers for the past few months were. So I've been tracking our net worth from the beginning. This is an Excel sheet that I track things in. And so just move over here to September. This gives me a side-by-side with December. For our net worth, we keep it as conservative as possible in that we really only calculate in the bank value of our loan, and this is the appraisal from the bank, not from a website or anything else. What we have in cash in hand, what we have in our retirement accounts, brokerage accounts, etc., and then what we have as our liabilities. So beginning in September, our home value, we have not had a formal appraisal, so that has not changed. It's still sitting at $470,000. Cash on hand and in savings, we did use a bit because I made a few purchases that I took out of some of our savings accounts for technology. So we're sitting at $4,500 there. Our retirement accounts are sitting at $351,720. Now, this is both my husband's and my superannuation combined. Just as a reminder, if you're new to my channel, my husband and I have only been in Australia for 10 years, so this is only our Australian retirement account. I do not include any of our US-based accounts in any of these calculations just because conversions and it just becomes way too much of a mess. But we're sitting at $351,720, so not too bad for only about 10 years. Our brokerage accounts, this is what we started. So our taxable brokerage accounts that we started after finishing up our debt. We have $7,798 sitting there. A lot of things are sitting in the red right now because, well, markets aren't looking too good, but that is why you don't have an emotional attachment to investing. You never put in any money that you are not willing to lose. They have their ups, they have their downs. Just don't look at it daily because lately it is bleeding red. And then I did include our vehicles. I am not including that anymore. I had an other here, which is to not be discussed. And so what I've decided to do is just have our micro investing there. And we have $35 in micro investing. So for our assets in total, because we took that big hit when I took the vehicles and this other one out, we are at $834,000 for our total assets. Our monthly asset change, though, was $11,049. Year to date, $28,723. And again, that is because we took the vehicles and that other out, but we've made up a good portion of that. So our monthly assets change was 1.34%, and our year to date assets change still in the negative at negative 333. Hoping that gets to the positive by the end of the year. If it does, fantastic. If it doesn't, hey, that's just where we start off the next year. That's how it goes. In terms of our liabilities, so this is what we owe. The only thing that we owe on is our mortgage. We have no other debt. Our mortgage at the beginning of September is down to $395,101. We started at $403,512 at the beginning of the year. Paid off our loan, paid off our credit card, so our total liabilities are down to $395,000. And I am actually more focused on reducing this liability amount than I am really on, beefing up the assets amount as much as possible. So our monthly liabilities changed $932. That was just from payments to the mortgage. Year to date, though, we have paid off $50,347 towards our liabilities, giving us a change of 0.24% for the month, which is about what we've been trending at, and then just over 11% for the year. Now, to calculate your net worth, you subtract your assets from your liabilities. So subtracting 395,000 plus from 834,000 gives us $438,952. That gives us a monthly net worth change of $11,981. Year to date, we have had an increase of $21,624, so about 2.81% in our net worth increase for, I'm going to call it quarter 3 because I didn't really track in August, and year to date at 5.18%. So because we had that change, we had that drop, we are a little bit off. We wanted to be between 5 and 10%. Hopefully we can get up closer to that 10% by the end of the year. But again, because a lot of this is dependent upon the market, we're really kind of at those whims and at those mercies. Main thing is not looking at one number at a time, but looking at everything holistically and having a comprehensive understanding. That's also why I think it's important to look at this over here percentage of assets. And I keep telling myself that I need to put this into a pie chart, but I have such a love-hate relationship with pie charts. But looking at the ratio of our assets to liabilities, that is more important. Looking at how we are diversified as well. I do like seeing that our retirement accounts are starting to account for a larger percentage of our assets as compared to the beginning of the year. And our home is getting closer to around that 50%. So it is nice having that spread out a bit more. And again, not having any of those liabilities is really important to us. And so finally, what I have is a graphical representation of our net worth and changes month by month. And so assets are in a light blue, liability in peach, and then net worth is a trend line that is going through the middle. And so you can see that there was a dip here from June to July, and this is where I changed up how it is we are calculating what our assets are. And so there was that drop that happened there, but of, again, that, 50 some odd $1,000. But again, even after doing that, we're still seeing an upward trend of what our assets are. We are seeing a downward trend that is going with our liabilities. That is allowing that net worth to change as well. So even with the changes that we had, our net worth is still higher now than it was at the beginning of the year by about $20,000. We have one more quarter to go to see what we can do with, with that. So it's just something that we look at to keep track of, really how we are building wealth. This is something that I've been doing for the past couple of years. I've said before, I really do wish that I had tracked where our net worth was 10, even 15 years ago, particularly when we were very heavy in student loan debt, because we were very much in the red, very much in the negative, which I know is something that tends to sometimes put people off from tracking their net worth. But I am a firm believer that you need to know where you are at to be able to see what the growth is. If you don't have numbers, you really cannot have accurate measurement, and you can't have a good interpretation of what those changes are. So it's just an additional tool for tracking how it is that you are going with building your wealth going forward, how you are moving towards increasing your financial independence. So a rather quick, I hope, video for this on my first, what I am dubbing Wealth Building Wednesday. I know I can't make up my mind of what I want to call it, but I promise for the rest of the year of 2021, I will call it Wealth Building Wednesday and just cover all of the different things that we have done in terms of budgeting and money decisions towards building our wealth. And I hope that all of you guys are tracking along pretty nicely as well. We are done with 9 of the months out of the year. That means that all of us should be reviewing our yearly goals, our quarterly goals, seeing how we're tracking as we push on to the final stretch of the year, the final quarter, the final 3 months. As always, I do hope that you guys are doing well wherever you are. If you did like this video, do give it a thumbs up. If you're interested in seeing how I go with trying this series, and yeah, by all means, subscribe. If you don't care, well, you know what? Subscribe anyways because it helps me out. But as always, do remember to choose kindness, show gratitude, always keep a positive mindset, and I will see you in the next video.